So pretty much, I know you guys must be aware that there are people who go to casinos and actually make some money. They leave the casino with more money than they came in with. So this puts us under the impression that you do have times that the casino does lose money, okay? A casino isn't going to shut down business just because it has one negative day or it has 2 negative days, 3 negative days. A casino must be able to continue running if they are to generate money. They totally are they totally have the mindset that we will be giving out a smaller percentage than we're actually making. It's just like going to the slot machine, and let's say normally the slot machines might be towards the house, meaning the casino is going to win more times than you will. So that pretty much just goes to say, I could be losing, and this is why this goes into with the odds and percentages and the dice. I could be losing a whole ton of my trades and still be winning winning fewer of them and still make a profit, okay? The casino is constantly giving out money, and the casino isn't going to get mad and get sad and all those type of things just because one person wins. Now, if there is a particular person that comes into the casino and is continuously winning, maybe they might be suspected of cheating or whatever. We're not going to touch on that, just because that idea really isn't applicable. Not applicable, but it's not really relevant for this. But you do have the casino obviously trying to manage its risk, okay? There are small risk games, like maybe let's say a slot machine. You do have high risk games, which would then be like playing poker or blackjack, whatever the case. You do have low risk games and you do have high risk games, but the casino has managed its risk all around the room, okay? So the same thing goes for you. While you're taking your trades, you should let's say only risk 20% of your balance at a maximum, no matter how much trades that you're taking. And that would be just currently for how much trades you're taking. But the portfolio can be diverse so much where you might be taking some stock trades, you might be taking some real estate investments along with Forex, futures. You can really diversify it so much. But the point is to diversify your risk in such a manner where you are safe to the degree that you can lose, whether taking a loss for the day or taking a loss for the month, and still being able to come back, okay? Survival is going to be the most important key to making a comeback, okay? Even with the coronavirus thing going on right now, the only way that basically you'll be returning to work when this whole thing is over is if you survive these times. If you don't survive these times, you won't be able to go back to work and continue to make money like that, okay? So the casino has this idea, don't run out of money while taking these losses so that it can actually make more money in the long run, okay? So this is a really important idea. Apply this to your trading, and the way you apply it is just by don't lose all your money in one day. Don't lose all your money in 1 week. Try to, I would always recommend my students take a sample size of 20, like especially in the beginning if you're not familiar with how trading works. And I always suggest the $10 challenge where you can take a certain amount of losses in a row, and let's say you take 20 trades in a row just because you want that sample size and you want to be able to look at it later and be like, okay, you know what? I won 7 out of the trades and I lost the other 13 trades. But let me be able to look at this and see, okay, maybe I can improve like this. Maybe I can increase my risk to reward ratio. Maybe there's something that I can improve on. But you can grab a sample size to see, okay, I didn't lose all my balance within these 20 trades. Maybe I lost 95% of my balance within these 20 trades. Maybe I increased 50%. But having a good sample size of at least 20 will be really good to look at and be able to see, okay, these are the results of this trading plan over 20 trades. How can I capitalize on this opportunity? How can I optimize this opportunity? Okay. We're running a bit behind time, but we're still going to make it happen, okay? So the next thing I want to touch on, which connects to all of these as well. This is the whole first part that I want to talk about, the mindset on why it's important to have. All these things are just adding up to having the winner's mindset towards trading, okay? Because I understand that not just because I tell you this here will you be able to get instant success with it, but once you're able to work with it and turn this into a habit, okay? Because I'm going to touch on this as well just right after that. When you're growing up in school and the workforce life and all that type of stuff, you're not really aware of a lot of these ideas. It's so much taught that you need to be such a winner and, you know, don't take any losses. But a lot of successful people are going to bring your attention to the fact that you can learn so much from your failures, from your losses. You can learn so much and actually be able to come back from it. And one of the most important things is just survival, being able to continue going even though things are in a negative state or whatever the case may be, okay? So the winners and losers mentality, I'm just gonna put this here. Okay, so that's the whole thing on, you can actually go through and read a lot of positive self-help books or whatever the case, because I find that they really do bring your mind to the right perspective you need to have on taking opportunities in life. You know, there's always a risk to go outside and cross the road. Even now, more than ever with the whole coronavirus thing, there's a risk going outside. So you need to limit your social interactions just so you can not take the risk of blowing your account, in this case, losing your life, right? Just so you can continue going later on. So another good thing on this, on the winners to loser mentality, okay? One of my favorite books reminds me of right now. So let's say you're a little child, maybe around the age of 2 or 3, and you're meeting a dog for the very first time in your life. And let's say the dog completely bites you really, really bad, traumatizes you for life. And remember I said this is your first experience with a dog, okay? I'm going to try to make this story really quick so we can move on to the next point of habits. But let's say the dog bites you really, really badly. Your experience to that, after that point in time may just be all dogs are bad, you know, oh my God, dogs are probably evil, the dog bit me, the dog was making me bleed, it was so painful, all dogs bite people. You're just going to have a negative reaction to that, okay? So let's say a few years later, 3 years later, 4 years later, when let's say you're 6 years old, you're 5, 6 years old, now you're let's say your parents are trying to bring you to the park to have some fun, whatever the case, and let's say you go and you see dogs at the park. Once you go there and you see dogs at the park, there's a strong likelihood that that child is going to be completely terrified just because they're linking this current experience to their past experience with dogs. Dogs are around. This dog might come up to me and bite me again, send me back to the hospital, might make me feel so much pain again. There's just a lot of fear resonating with this child because that was the first experience that kid had. That first experience was just really painful. It was a negative experience, okay? And I'm going to go through and relate this to trading right after. But let's say this kid, he leaves the park. He was terrified. He goes back to the park the next day. Now, he might just be terrified to go to the park this time, completely scared. Or you do have the perspective where he might be telling his parents, I don't want to go to the park. And as soon as maybe the parents will force the kid to go to the park, and the kid may just be completely scared, and this will traumatize the kid. Like, I can't stress that enough. This will traumatize the kid. They may go to the play place and they just sit there shaking in complete fear. It might seem over exaggerated, the story that I'm getting, but you can just apply it to different areas of life, whether certain people are still afraid of the dark. Like certain adults might be afraid of the dark. Certain adults might be have certain relationship issues or whatever, just because they stem from a foundational base from their childhood. Things just like this, okay? So let's say the kid goes back to the park and they have the experience where, you know what, I am going to be open enough to go play with these dogs and just have an interaction. Let me expand the sample size for a little and, you know, see what these dogs are saying, okay? So you go over to the dogs and let's say you go and, you know, you pet it. You start playing with it. Let me just rewind a little. Let's say the kid is seeing other kids playing with these dogs. The kid will be really confused as to why this is happening. Why aren't the dogs biting this person? Why isn't the dog making this person bleed? Why isn't this kid in pain? Why is the kid smiling at these dogs? Okay. Now this will, like I said, make the kid really, really confused because his first experience told him dogs bite people. Dogs will make you feel pain, and this will just make the kid confused, okay? So this goes lightly, I just want to touch on this, that this goes towards trading, as if I take 5 winning trades in a row, and then I go through and I take one losing trade that might be really, really bad, I might be taking this very poorly psychologically and be like, oh my goodness, like, I remember I had the idea as well that no matter how much money I make in the market always comes back to take it. This ultimately isn't what's happening, but this is the same idea the kid is going through, okay? So even though things were away in the beginning, things are different now. And you might just think this is the cycle of things. The dogs are ultimately going to return to that state of biting me, right? Things just are ultimately going to turn out worse. Okay. So also, so once the kid goes through and starts playing with the dog, he'll then return to a state of confusion, be like, okay, why did the first dog bite me? Why did I go through pain with that first dog? And okay, so the way this whole thing goes towards with trading is that you can't be linking your current trade to your past trades, like having the same emotional idea. Oh my God, the last 3 trades were winners. I'm going to skip this next trade because the last ones were winner. I don't know why people would have that idea, but you could definitely have that idea. There's a lot of roadblocks for traders along the way. So I don't want people to be linking past experiences to present ones. The market does have a random approach, and we will be touching on that in a little bit later. I just need to pick up the pace. But pretty much, the market has a random approach. You're never going to know which trade is going to win and which trade is going to lose. And that goes back to this whole idea that I was talking about here with the whole dice, with the whole odds and percentages type thing. Because, like, if we're taking these 4 losing trades in a row and we're like, you know what, we're not going to take the next trade. What if this next trade was a winner? We would have just ruined our total results because we were linking this current trade opportunity to the past ones, okay? Like, let's say this trade, they're all winners, and we want to hop in and take these trades, and they turn out to be losers. We might be very stubborn with the trade as well to, let's say, remove our stop loss, which is something we never want to do. We might remove our stop loss because we want to give it more room to breathe, just because the last 4 trades were winners, okay? You don't link past experiences to the present one because every trading opportunity is random. Every trading opportunity has a random outcome. And I don't really want to touch on it, but anybody who says they have a 92 winning average pattern or all those type of things, those things are completely like, they don't work that way. Just because if you have a head and shoulders pattern, if you have an engulfing pattern, if you have certain harmonic patterns, or what other patterns do you have? Triangles, ranges, trend lines. I know everybody has losing days or losing trades with these patterns. No matter how successful they're supposed to be, they all have losing times, and we will touch on why that happens, okay? But not everybody is looking at the market with the same tools, okay? And even if everybody was looking at the market with the same tools, everybody would still be losing to a degree, just because when I make money from my winning trades, I take my trades from losing traders. So a certain degree of people have, the money's always being displaced from left to right, right to left, right to left, left to right. The money's always being displaced, so everybody can't win at one time. That's just how the market works. For Apple to send me an iPhone, they literally have to send that one iPhone. We can't both share that one iPhone. That's not the way that's going to work. Okay, so the next point are the habits. And the winners and losers mentality thing. I'd like you guys to just go through and read some books. There's a lot of great books on having a positive mental attitude. You can't get sad and mad about your losing trades. You can't get too happy with your winning trades, or you're going to maybe start getting greedy and let me increase the risk this time. Let me increase the risk. Let me increase the risk. Let me remove my stop loss. Let me do more. If you just stay consistent with the risk management system that you might be going with, low risk, because like I said, if you're taking notes on this, which I stress take notes, you can take a large sample size. Always leave room for error, because we do have random outcomes with every pattern in the market. One of the key things which we're touching on right after this is risk. Just risk management. So risk to reward which is one thing which is really going to put a lot of the trades on our best sides. And trading plan stuff is really based on your personality, but we're going to touch on that.